Hey everyone, how you doing? This is Chris Johns here at Guaranteed Rate Mortgage, and I get a lot of questions about closing costs from both real estate agents and home buyers. And what I wanted to do with this informative educational video is to kind of break this down and give you guys all of the facts and kind of how this works. So let's start with a real basic assumption of a $500,000 purchase price. We've got the clients putting 5% down, so that's $25,000. So our loan amount's $475. So what we're gonna do here is I have broken down the closing costs into 3 different sections so that you can kind of understand each of them. So let's just dive in here and see if we can understand closing costs a little bit better. So we're gonna start with the third-party fees. So the third-party fees are the other entities or companies that we need to hire to help us close a home loan transaction. So what we're going to do is we're going to take this first fee of an underwriting or a loan fee of about $1,400, and then we're going to need to hire an appraiser to go out to the home and give us a value. Those appraisers are third parties, separate from the lender, and in Western Washington, appraisals are right around $900. Now, the next portion is going to be the escrow and the title fee. So when we close a home loan transaction, we need to hire an escrow company to help us manage all of the money moving around and the final loan document signing and the transferring of ownership, that kind of stuff. So they are the non-biased third party that helps us close a loan. And I've got those 2 fees estimated at $750 and $850. And those can vary a little bit, but these are pretty close. The next one is the county. So the county that you're in is going to have some kind of a charge to record the final deed of trust in your name and show that you're the new owner at the government level. And in most counties, somewhere around this $400 to $450 is a pretty good estimate on that. And then we've got a credit report of about $50. And so with the third-party fees section, we're coming in right about $4,400. So the next section is kind of the most interesting one and the one with the most variables. You'll see that the very first one I have here is 6 months of prepaid property taxes. Now, I explained this section as a bucket of money. So when we close a home loan, we're required to fill that bucket of money up with property taxes and homeowners insurance. Now, you could imagine that if the property taxes on any given home were different one to the other, this amount would also be different. So what I've done is I've taken a $350 a month assumption on this particular purchase price of $500,000, which I find to be pretty good estimate for our area. So by the time we put 6 months of property taxes in there, we're at $2,100 for that. So the next one is going to be prepaid homeowners insurance. Now, when I have an initial consultation with a home buyer, in most cases, they have not shopped for homeowners insurance yet. And so we won't actually know what your homeowners insurance cost is until you shop for that and let us know. Now, I know from experience that $80 a month is a pretty good estimate for this purchase price. And so what I'm going to do is take $80 a month times our 15 months to go in the bucket, and that portion is going to be $1,200. Now, the final section of our escrow and prepaids is going to be what we call daily prorated interest. So what I've done right here with this 15 days is I have simulated that we are going to close your loan in the middle of the month so that 15 days have passed and 15 days are remaining for you to pay the interest on your loan. And I've got this estimated $85 a day. But if you take a look at these numbers, you could imagine that if there were only 2 days left in the month, let's say we closed on the 28th, that would only be $170, right? Well, let's say we closed on the 2nd of the month. Now we've got a prepay interest for 28 days. That's going to be closer to $2,000. So that's a pretty big spread in your closing cost figure. So honestly, the day of the month we close has quite a bit to do with how much your closing costs are. But what I've done here is I've assumed 15 days are remaining in the month at 85, and that puts us at $1,275 for this portion. I figured right in the middle of the road is a good place to start. So these 3 different costs here to fund your escrow account prepaids is just under $4,600. Okay, so let's take those two numbers and add in our last variable piece, which is optional. So this is the interest rate buy down. Now, you do not have to buy your interest rate down in most cases, in most loan programs, but it is optional. Now, some people buy their interest rate down just a little bit. Maybe they spend $500 or $600 towards a lower interest rate slightly, or maybe they choose to spend $6,000 or $7,000 or $8,000 and really buy their interest rate down aggressively. Those are optional for you, and we can talk about kind of the pros and cons and the math on whether that makes sense. So what I did here just for our illustration on this video is I've assumed a 1% hypothetical rate buy down, which is $4,750 on that loan amount of $475. So now we're going to go down to this bottom section here and kind of wrap it all up. So we've got our third-party fees of about $4,400, and we've got our escrow account prepaid bucket of about $4,600. So if you choose not to buy your rate down and we just have the two of those, your closing costs are about $9,000. And I think that number is pretty safe for you to use anywhere in like the $400,000 to $600,000 purchase price range, keeping in mind that the day of the month that we close will adjust your closing costs, and the amount of the monthly property taxes will also. So those $600,000 and $700,000 homes with higher property taxes are naturally going to have a higher amount in the escrow account by the time we put 6 months of those in. But let's just say that this scenario is where we're at. Our closing costs are going to be right around $9,000. Now, if you choose to buy your rate down to the tune of 1%, and we add that $4,750, now you can see that we're starting to sneak up closer to $13,000 and $14,000 for our closing costs. So these are some conversations that we need to have on whether you want to buy your rate down or not, so that we can determine what your closing costs are going to be. But as far as this informational video goes, I think this is a really nice job of helping you understand how this works. So if you have a specific scenario that you want me to run, I'm certainly happy to do that for you and give you a closing cost estimate. But I think this will give you a little bit of education, and I hope it helps out. So thank you so much for watching the video, and look forward to helping you out in the future here. Take care, everyone.